Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Versace in London, and these are the stories that set your agenda. Asia stocks rise after a tech rally pushes the S&P 500 past 5,600 for the first time ever. Investors look ahead to crucial U.S. inflation data for clues on the Fed's plans. Top officials from Joe Biden's campaign are meeting Democratic senators as comments by former Speaker Nancy Pelosi add fuel to speculation over the president's candidacy. And economists warn the new UK government faces a £30 billion budget hole. We'll look ahead to today's GDP data. Well, good morning again, everybody. Let's pick up on some of the market price action because we got yet another record high for the S&P and Nasdaq into the close yesterday. Both of those Wall Street indices ending the session up more than 1% higher, fueled by some of the gains in tech stocks. We will be talking more about that on the show, especially with some positive commentary around Apple. Today, you can see that the futures are trading at slightly towards the green as far as European markets are concerned. The FTSE 100 about 0.2% higher. The Euro Stoxx futures up a similar amounts after a more positive close yesterday. Obviously, the French index back in focus again. We did see it recuperating some of the losses of the prior few days in yesterday's session. But S&P futures basically trading sideways. The major event today is going to be that CPI print. Will we get further signs of a deceleration or disinflationary process coming through in the U.S.? That is a big question for investors. As for some of the other assets that we're watching this morning, I've got to say we've been keeping a close eye, obviously, on Powell's testimony at Capitol Hill, and there hasn't been a meaningful impact across some of these other asset classes. The USD is trading slightly weaker, down about 6 basis points, hasn't moved a lot over the course of this week. Market pricing of interest rates is still sitting at around 80% priced in for that first rate cuts to begin in September. So you can see that the 10-year yield, again, not a lot of movements here, 4.28%. We are basically a couple of basis points lower from where we were at the beginning of the week. But then gold is getting a bit of love, up about 0.5%. Some of the weakness in the USD is beginning to get factored into gold as we talk about the potential for the rate cutting cycle. And then energy squarely in focus as well, just shy of $86 for Brent. And there has been an upward trend for Brent. Recently, overnight, we had some data suggesting that U.S. stockpiles has started to drop. So that is a bullish signal for energy markets. But let's move on and take a look at how Asian markets are faring as ever with Hwang in Singapore. Avril, what are you watching out for this morning?
Yeah, Jemana, we're watching that rally that is trickling through from Wall Street today in the Asian session. Investors in a good mood. Take a look at how equities are faring. Asia's stock gauge at the highest since February 2022. This is a tech-driven rally. Infotech is the sector that is performing the best, helped along by the Apple suppliers after the iPhone maker said it will be shipping more iPhones, but also the likes of TSMC as we got that sales surge a day ago. So keep in mind, those are the stocks that are in focus. I'll take you there in just a bit. But the other thing I wanted to highlight is what we're seeing on the mainland as Chinese authorities have been restricting some of the short selling. They want to crack down on quant trading strategies. So we're seeing the equities with outstanding shorts among those that are gaining ground on the mainland today. Okay, this is what we're seeing across the board. Let's take a closer look at where we're seeing some of the equities in focus. TSMC, as I mentioned a short while ago. Going forward into next week, what we'll be watching out for is its earnings call. Remember, this is the sole supplier for NVIDIA and Apple's advanced chips. So we want to see whether it says anything about being able to charge customers more. That will be helpful for its earnings growth. Lagan is an Apple supplier doing well in Taiwan today. And of course, SK Hynix getting an upgrade from Hana Securities on its price target, helped along it things by higher chip prices as well as a weaker Korean won. Flip the board, because as we talk about the won, today we're actually seeing it gaining ground, getting a boost from the BOK, leaving rates unchanged, but it also seems to be wanting to keep things rather restrictive. And the BOK governor even talked about how the market expectations for rate cuts seem excessive. So the won, along with the Thai baht, are among the currencies that are gaining ground today. Of course, this is also a reflection in the Asia Pacific of Powell's comments, given how he said, they don't need to see 2% inflation in order for rate cuts, and Asia FX are mostly doing okay. Jemana.
Excellent. Avril, thank you so much for that overview there. Avril Hwang in Singapore. Well, Fed Chair Jerome Powell returned to Capitol Hill for a second day of testimony as he backed the case for U.S. rate cuts in the coming months. But he warned policymakers are waiting for more data to confirm a sustained path towards the Fed's 2% inflation target.
I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear that, but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
Well, let's talk more about this with our MLive strategist, Mark Cranfield. Mark, interesting to hear the Fed Chair Jerome Powell there talking about some of the confidence that they have that inflation is moving in the right direction. Of course, key ahead of that CPI print. But I also think it is notable how much he's been talking about the labor market recently and the fact that there are signs of some weakness appearing in the labor market. He's talked about the labor market cooling considerably. How should we read those remarks?
Well, we mustn't forget that it's a joint mandate that the Federal Reserve have. It's the employment situation and inflation are the two key factors which help to drive all of its decisions. And obviously, if you look at the jobs data that we've had, particularly in the past year or so, it's been generally very strong. Unemployment rate is still in the low 4% area. So not on its own really enough to justify the Federal Reserve starting to lower interest rates. But if you combine it with an inflation forecast that is starting to go in the right direction, you put the two together, if the outlook for the jobs market is to weaken a bit and they can get those core numbers down on the inflation as well, maybe together, that's enough to get the Fed over the line in terms of lowering interest rates. And that's certainly how the market is reading it. So if you look at the bond market, clearly the fact that you've got 10-year yields which are more than 100 basis points below where the federal funds rate is, that's clearly traders are pretty confident that the next major move is going to be a lower yield curve right across from start to finish. And obviously it's just a question of when the Fed moves over. So as Bloomberg Economics has been pointing out, the key for the inflation data today is not so much the headline numbers, it's where the rolling averages for 3 and 6 months go. And they're likely to be below 3%. So that's very important. If we get numbers which are coming in with a 2 handle, certainly the Fed members will be much more confident that they're getting close to their target and the direction is good enough for them to probably start to move. So if we get a benign CPI report today, Jerome Powell speaks again early next week. It could well be that within a few days we're pricing in a rate cut for September. It's not fully there yet, but it won't take much to move the needle and for traders to put their money on a very early Fed cut.
Yeah, so let's talk about that in more granularity. The market is pricing at around 20 basis points of a rate cut in September, so almost fully priced in, but not quite there. In terms of the core CPI month on month, the estimates are that it will come in around a number 0.2%. If we do get a number that is lower than that, how could that affect market pricing?
Well, certainly it'll be the currency traders are the ones who'll be watching it very, very closely. So in the foreign exchange market, you can already begin to see a few cracks appearing in the dollar space. Not so much in the dollar yen, of course, and the dollar yuan. Those currencies have got different story. The background, the central banks are still in a pretty easy policy there. And domestic growth is not that great. But if you look in the rest of the G10, where there's more stability, like the UK, for example, Canada, Australia, those currencies are beginning to make some ground. Even the euro is pushing above the 108 level. So as people look ahead to the fact that eventually the Federal Reserve will be on this path of reducing interest rates, the momentum on that is probably going to be stronger than what you see in the UK or in the European Central Bank. Not to mention, as we look ahead to the November elections, people are starting to get a little bit nervous that the US political scene is going to get more cloudy, more uncertain. Generally, when investors are uncertain about the path that a country is taking, they hit the currency. So the US dollar will have to have a bit of a discount as people are uncertain about where the political vote is going to go in November. So that will gradually be built into the market. It will be taken out more in terms of the major currencies than in the other rest of the world. So that's what traders are going to be looking for. A bit more development on the US dollar. Bond market is already starting to think there's an easing. Equity market is in a different space. They're very focused on AI and earnings, and they seem to be fairly immune to what's happening elsewhere.
That's one way to put it, as both the S&P and NASDAQ making new record highs. Life strategist Mark Cranfield, thank you. Now, Nancy Pelosi has added to the mounting pressure on Joe Biden to make a decision about his candidacy. The former House Speaker says the president should, quote, decide quickly as time is running out. Their mark comes as other heavyweight Democrats voice doubts over whether Biden can win in November. This as the president heads into his final day at the Washington NATO summit today. So for more on this, let's bring in Bloomberg's John Harney in Washington. Thanks for staying up late for us. What is the state of Joe Biden's candidacy? It's been almost 2 weeks after that debate appearance. And since then, he's insisting that he wants to stay in the race. But many people are skeptical.
Well, you're right. His campaign, exactly 2 weeks after that pretty awful debate appearance, remains under siege. However, it's a very polite, understated siege. The calls for him to leave the race have been filled with praise for what he's done these last 4 years and what Democrats regard as his accomplishments. But try as they might, Biden and his allies have not quelled the misgivings that began on that now fateful night 2 weeks ago.
And in terms of the voices that are urging him to step aside, I mean, can you just highlight for us who are some of the most prominent names and how influential they're actually going to be in terms of convincing him to step aside?
Well, it's hard to say who, if anyone, could convince him. We don't have in this country any more power brokers, party bosses who could come together to dictate something like that. But you mentioned Nancy Pelosi, who's she's no longer speaker, still has enormous respect in Democratic circles, and then George Clooney, the Hollywood star, wrote an op-ed in the New York Times in which he said that Biden should leave the race, as did Peter Welch, a senator from Vermont. And he became the first Democrat in that chamber with an op-ed in the Washington Post to urge the president to step aside for the good of not only the party, but the country, because Democrats look upon another Trump administration with great trepidation.
Yeah, it is notable that even George Clooney felt the need to wade into the debate. But look, the clock is running. The Democrat convention is going to take place on August 19th. So if there is going to be a change in candidacy, it will probably have to happen in the next few weeks, won't it?
Well, that's certainly right. And the Republican convention begins next week, or takes place next week, and that will culminate with the third nomination by the Republican Party of Donald Trump. And it'll be interesting to see how much effect that has on this clamor, if you will, growing clamor for Joe Biden to leave the race, and how he will react. And as you point out, he'll have a chance later today at the conclusion of the NATO summit to showcase his confidence, his abilities at a press conference to close out this very important 75th anniversary summit that brought so many world leaders to Washington and into contact with him. And there've been plenty of anxieties among them as well.
Yeah. Very fair. Well, it's going to be something that the whole world is watching very closely. Bloomberg's John Harney in Washington. Thank you for staying up late for us. Well, on to our day ahead stories and some of the major stories that we're focused on today. And in terms of some of the major data that's coming out later today, I should say, 1:30 p.m., as we spoke about, we have U.S. CPI coming up. It could be a major mover for markets. That we spoke about that earlier with Mark Cranfield. That 0.2% core CPI print is going to be in focus. After that, of course, we have the regular U.S. initial jobless claims. Keep an eye on that because Powell has been pointing to some of the weakness in the labor markets. And so if we do get a higher number than we've had in prior months, and of course the trend has been upwards, and that's something to watch. And then finally, we're wrapping up the week of auctions with the 30-year bond auction. It'll be interesting to see how much demand actually comes through for bonds at these levels. Also, coming up on our show, Apple and Samsung are betting on AI to fuel demand for their new lineups, with the iPhone maker expecting a 10% bump in sales this year. We'll talk smartphones next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Apple aims to ship at least 90 million iPhone 16 devices in the second half, counting on AI services to fuel demand after a bumpy 2023. Our tech reporter Annabelle Jewelers joins us for more on this Bloomberg scoop. And Annabelle, it seems as though Apple is relying heavily here on its AI features to boost upcoming demand. This after a softer 2023 for iPhone sales. Why is it going to be different this year?
Yeah, that's right. We have seen pretty anemic sales growth for Apple over the past couple of years, but they're hoping, as you say, that this time around might be a little bit different. Last month, we had Apple unveiling how it was planning to integrate AI across its product lineup. We know, for instance, that ChatGPT is going to be integrated. It's going to help users create text, create images. They're going to be also updating Siri, for instance. So lots of new AI features are coming into its products, and that's what Apple is really counting on here, or at least it's what we're hearing from sources. So what we've been told is that, yes, there's going to be 90 million iPhone shipments just in the second part of 2024, and that's around a 10% increase on the year or compared to earlier models. Of course, sometimes when you do have that comparison, it's that base effect comes into play as well, given, as you said, those weaker sales figures that we have seen of late.
Yeah. Well, Annabelle, Apple obviously isn't the only one betting on AI features. Yesterday, Samsung had their launch event. What did they unveil at the Galaxy Unpacked event, in addition to some of the wearables that I think many people would be interested in hearing about?
Yeah, wearables was certainly one thing, and we can get to that in a moment. I think if you were to take a look at the event overall, it was really just about, again, AI, similar to Apple, but they are infusing AI across their product lineup. In terms of the actual products that are coming out, they had a real focus as well on the foldable phones. This is where Samsung in particular is trying to make inroads into China because it doesn't have a very big slice of the sales pie in that country, but foldables in particular. So two new devices. They're coming with a little bit of a pricier cost, $100 more expensive than the last round. But as well, as you said, wearables was another big takeaway. We had, for instance, two new watches coming out, really going head-to-head with Apple here, because one of those watches in particular looks quite similar to Apple's premium end version. And then as well, there was this new ring, which we'll see how popular that is. We've got IDC, for instance, expecting around 2 million to be sold this year. But that ring, if you're prepared to wear it, it can track your fitness, your sleep, a whole lot more. It just comes with a $400 price tag as well.
Let's see how well that one does. Our tech reporter, Annabelle Jewelers, thank you so much for the report. Also coming up, Archegos founder Bill Hwang has been found guilty of fraud and market manipulation 3 years after the fund's collapse. More details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Archegos founder Bill Hwang has been found guilty of criminal charges stemming from his firm's multi-billion-dollar collapse. Bloomberg's Vonnie Quinn has more from the federal court in Manhattan.
Tiger Cub Bill Hwang, founder of Archegos Capital Management, found guilty of a raft of criminal charges in Manhattan today. These pertain to racketeering conspiracy, 2 counts of securities fraud, wire fraud, and several counts of market manipulation in particular stocks such as Viacom, CBS, Discovery, and Tencent. U.S. Attorney Damian Williams in the Southern District of New York said that Hwang intentionally lied to Wall Street banks to try and up the trading capacity of the firm in order to intentionally move the prices prices of stocks in the portfolio higher, and that this doom loop just continued and continued. The defence, for its part, said it couldn't have been a pump and dump scheme because Hwang never sold a single share. There was no dump. The defence also saying that the wipeout was due to a black swan event, or indeed a week where there was a perfect storm. Now that week came March 22nd of 2021. It was a week where Viacom issued more shares, and the SEC said it was cracking down on some China companies listed in the United States. Two events very detrimental to Archegos' portfolio. Within hours, margin calls started coming in from various banks, and by Friday, Archegos was no more, and collectively, banks across the street were down $10 billion. Sentencing, which in theory could be up to 200 years, at least for Hwang, but is obviously likely to be a fraction of that, is set for October 28th. Both Hwang and Halligan are likely to appeal. Vonnie Quinn, Bloomberg News.
Now to some other stories making news. Israel is telling all Palestinians in Gaza City to leave immediately as fighting intensifies in what used to be the enclave's most populous area. The Israeli military dropped leaflets on the city telling residents to move south. Gaza City was home to about 1 million people before the Israel-Hamas war began in October. It was the first place Israeli forces targeted in their ground offensive. The U.S. will apply new tariffs to steel and aluminium shipments diverted through Mexico. That's in a bid to prevent China from getting around existing levies. The White House is looking to head off what it fears could be a flood of steel and aluminium products from oversupply into China. And a quick look at how oil is trading. We have seen oil trading steadily higher over the last couple of weeks. We see Brent just shy of about $86 here. So a firm upswing in the last couple of weeks, boosted by the demand outlook, better seasonal outlook. OPEC demands yesterday reiterating that they see demand growth for oil at 2.2 million barrels per day for this year. Economic growth revised slightly higher to 2.9%. So that's underpinning some of the strength there. In addition to the fact that the stockpiles out of the U.S. have started to drop as well. And add to that the earlier start to the hurricane season, the fact that Hurricane Beryl did come in quite strongly, even though it didn't have an impact on oil. What traders are anticipating is that the hurricane season will be quite strong. So something to watch out for from a supply perspective over the next couple of months as we head into the strong seasonals. Now, elsewhere, France's President Emmanuel Macron has called on parties that represent Republican forces to build a broad majority from the political center. This snap elections left the country with a divided parliament and no obvious path towards a stable government. Macron wrote in a letter he would wait to name a prime minister in order to give negotiations between parties a chance to bear fruit. And Novo Nordisk once-weekly insulin has failed to get approval from U.S. regulators after the government asked for more information to complete its review. Novo said the agency asked for details on the manufacturing process and the type 1 diabetes indication. The Danish pharma giant says it is evaluating the requests and plans to work closely with the agency. And also coming up, economists warn that the new UK government faces a £30 billion budget hole. We'll look ahead to today's GDP data next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Jelena Versace in London, and these are the stories that set your agenda. Asia stocks rise after a tech rally pushes the S&P 500 past 5,600 for the first time ever. Investors look ahead to crucial U.S. inflation data for clues on the Fed's plans. Top officials from Joe Biden's campaign are meeting Democratic senators as comments by former Speaker Nancy Pelosi add fuel to speculation over the president's candidacy. And economists warn the new UK government faces a £30 billion budget hole. We'll look ahead to today's GDP data. But first, a quick check on how markets are faring. And as we spoke about in the headlines, we had a very strong handover from the U.S. yesterday, with both the NASDAQ and the S&P making another record high by the end of the day. Both of those indices up more than 1%. And you can see into the session today, we are dipping somewhat, trading sideways. S&P futures, NASDAQ futures pointing to a moderate open, barely negative. But of course, the big data point to watch out for today is going to be that U.S. CPI print. Will there be further signs of disinflation coming through in the U.S., and how is that going to affect market pricing, sitting at around 20 basis points of rate cuts priced into that September meeting? You can see European futures actually leaning more positive than their U.S. counterparts here. In terms of other assets that we're watching out for this morning, I spoke briefly about what the market is penciling in for the Feds, and you can see that the 10-year yield is sitting below 4.3%, 4.29 roughly is where we're at right now. The U.S. dollar continues its downtrend over the last couple of days, some weakness coming through for the greenback. Gold doing quite well, and that is probably because the USD has started to see some softness. So gold is trading about 0.5% higher, just shy of 2,400. And then Brent, as we spoke about in the last segment, is doing quite well as well, up about 0.8%, just shy of $86 this morning. Now, to the UK now, where economists have warned that the UK's new Chancellor may be facing a £30 billion hole in her budget. Meanwhile, the latest GDP data is due to land in about 30 minutes' time. For more, we're joined by UK correspondent Lizzie Burden. It's great to have you here on set. Lizzie, I feel as though the conversation around that £30 billion hole and GDP growth are actually very closely linked together. So maybe let's just start with the GDP data today. What can we expect?
Yeah, you bang on. And the reason that the government is targeting economic growth, this new Labour government, is because they want to avoid a difficult choice between tax rises and spending cuts. But that rests on achieving growth that most economists say is unrealistic. So we did a survey, actually, and the average of 56 economists puts growth at 1.3%. They're targeting 2.5%. The Office for Budget Responsibility, the fiscal watchdog, sees 1.9% for 2025. So there's still a gap that Labour needs to fill. But as we look in the shorter term towards these numbers that come out in less than half an hour's time, the bigger picture is for more of a recovery. We've had a lot of stagnation recently. In this particular month, for May, we're expecting a bit of a rebound from April, when, of course, it was very, very wet. And you've already seen a rebound in the retail sales. So economists expect a 0.2% gain in May, which would be consistent with the retail sales.
Well, given the weather, I just wonder what the July data is going to look like, given how bad it's been this week.
I mean, you've been avoiding the weather in Dubai, thankfully for you.
Exactly. Lizzie, I also want to turn to some of the market pricing as well out of the Bank of England, because Hugh Pill made some comments yesterday indicating that perhaps he doesn't seem inclined to go for a rate cut just yet. So how's that impacting market expectations?
I've been missing all of the BOE commentary while we've had the election campaign on. They're back out of the gates, and Hugh Pill throwing a bit of water on the expectations for an August rate cut. So bets now, as you say, below 50% looks less likely, actually, because of a couple of things that he said. He says the timing of the first cut is an open question, and he says it's a matter of when, not if. So we are still expecting cuts, just perhaps not in August, because he's worried about wage pressures. He's actually hinted that the one or two upcoming data prints are not necessarily going to change his mind here, and therefore you saw the changing in the pricing. You might not see as much divergence between the BOE and the Fed as previously thought. And we also heard from Catherine Mann, one of the big hawks on the committee, but I would say her remarks perhaps less surprising, less dial moving than Hugh Pill's.
Yeah, she is one of the notable hawks on the committee. Lizzie, wonderful as ever to chat to you. That was Bloomberg's UK correspondent, Lizzie Burden. Now, the UK's Financial Conduct Authority has set out a simplified listings regime with a single category and streamlined eligibility for companies seeking to list in the country. The new rules remove the need for votes on significant or related party transactions and offer flexibility around enhanced voting rights. And we'll be speaking to Sarah Pritchard, the FCA's Executive Director for Markets and International, later today. That interview will happen at 8:45 a.m. UK time. And the future of Thames Water hangs on a pivotal ruling by industry regulator Ofwat later today. It comes after Britain's largest water company admitted it only has enough cash to fund operations for less than a year. For more, I'm joined by Bloomberg's Jess Shankelman. Jess, first of all, thank you for joining us on the set. What can we expect from this ruling later today?
So it's coming at 7 a.m. UK time, and we're expecting hundreds, if not thousands, of pages from Ofwat, the regulator. But the thing we're really going to be looking out for, and that Thames Water is going to be looking out for, is how Ofwat sets the return on equity costs, what it says it's going to cost companies to raise equity over the next 5 years. Thames is heavily indebted. Its its gearing is looking at about 80%, which is the highest in the industry, and it desperately needs equity. Its shareholders walked away in March. It doesn't look like they're going to come back. They might if Ofwat sets the equity level at the level it wants, which is about 5.7%.
So what does Thames Water need to see today out of the regulator in this decision in order to stay afloat? It seems like there's a clock ticking.
Yeah, exactly. So Thames has said we need a return on equity at 5.7% in order to attract investors. Otherwise, they're just not going to come to us. They can go anywhere else, or it's easier to raise debt. But obviously, they can't really raise any more debt because they're so heavily indebted already. Ofwat has said 2 years ago, it set out its early view. This is a very, very long process, and it said the cost of equity is going to be about 4%. So that's a huge leap that it's going to need to see to 5.7% today. Obviously, we've had huge changes in the economy since then, but whether it's going to see that really is possibly quite unlikely. But, you know, they're going to be hopeful. If Thames doesn't get that, it's still got another 6 months to negotiate with Ofwat until the final determination, or it may hope that some equity investors could be attracted at this lower level.
Yeah, well, it's definitely an issue that the new government also will have to think about, Thames Water and the rising debt levels. Thank you so much. That was Bloomberg's Jess Shankelman. Oh, well, listen to this. England is through to the European Championship final after latest dramatic come-from-behind win. Ollie Watkins, who came on for Captain Harry Kane, scored in stoppage time to earn England a 2-1 victory over the Netherlands. The win saw the King passing the players the royal family's very best wishes and warmest congratulations. England now play Spain in the final on Sunday. And, of course, everyone's question is it coming home? Yes, it is coming home. All right, on to other data that we're watching out for. In addition to the football, of course, we care about the football. We also care about other market-moving events for the investment space. We have, of course, that U.S. CPI number to watch out for. That is happening at 1:30 p.m. UK time. We also get initial jobless claims. Remember, the trend has been upwards, so we're keeping a close eye on some of the weaker signals coming through from the U.S. labor market. And later on, 6 p.m. UK time, we have that 30-year bond auction. $22 billion worth of 30-year bonds will be out for auction today. So interesting to see whether foreign demand shows up there. And in terms of some earnings that are coming out, getting the beginning of the earnings season, Delta come out with their earnings, PepsiCo as well. And then we get plenty of Fed speak. So lots more to hear from the likes of Cook, Bostic, and Musalam for anyone watching the central bank space. Well, also coming up, NATO leaders call out China's military support for Russia. We take a look at how the alliance is planning to continue its support for Ukraine next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. NATO leaders have issued the alliance's strongest ever language, calling out China's military support for Russia. That's amid reports that Beijing is developing an attack drone for the conflict with Ukraine. Let's get more from Bloomberg's Tony Halpin. Pretty notable that NATO came out with this declaration yesterday. It was very strongly worded, specifically about China. What is driving the alliance's concerns about Beijing's support for Russia?
Yes, good morning. They labelled China a decisive enabler of Russia. As you said, quite strong language. And the concern there from NATO is that China is providing dual-use components, things you find in consumer goods that can also be adapted for use by Russia's military, and therefore bolstering and continuing Russia's war in Ukraine. Beijing says it's essentially a neutral in this war, but NATO's language indicates that increasingly it doesn't believe that, and that it's calling out China over its support for the Russian war machine and for its help in ensuring Russia's economy can overcome international sanctions that were intended to bring Putin's economy to its knees and make it very difficult for him to continue the war. So yes, NATO increasingly focusing on Beijing's support for Russia. Russia and China say they have a no-limits friendship, and Putin has certainly been exploiting that friendship. Even as recently as the last 2 months, he's met twice with President Xi Jinping, and so they are very clearly demonstrating their support for each other on a political and diplomatic level. And NATO is increasingly saying, well, on an economic level, we're less and less happy with Beijing's support for Russia.
And of course, around the summit, there have been several decisions being made in terms of supplying Ukraine with extra weapons, artillery, some of those long-range missiles. But what are the allies actually saying about support for Ukraine to be able to continue fighting the war?
Yes, they're doing two things at this summit. As you say, they're making pledges of weaponry, including things like F-16s, to support Ukraine in the short term in its fight to defend itself against Russia. And longer term, they're looking to bolster Ukraine's military so that it can provide a credible deterrence to Russia in the future if and when this war eventually comes to an end. So a group of NATO countries are pledging, for example, to get together in the next 6 months and set out a roadmap to strengthen Ukraine's defences and military over the rest of this decade and into the 2030s to provide a kind of long-term credible deterrence against Russia that will bolster Ukraine and eventually offer Ukraine membership of NATO. They're talking about an irreversible path for Ukraine into NATO, but there's no clear date attached to that, and it should be remembered that NATO has been holding open the door for Ukraine to join the alliance ever since 2008, so it's certainly already been a long and winding path. But still, the commitment is to bolster Ukraine, to strengthen its defences for the long term, and make it ready for entering NATO if and when that becomes possible.
Perhaps not as soon as President Zelensky would like, but at least the offer is there. Bloomberg's Tony Halpin, thank you. Well, Ukrainians have started taping grenades to drones with duct tape in an attempt to repel Russian attacks. Now, a cheap, locally assembled flying arsenal is changing the economics of war.
In Ukraine, unmanned aerial vehicles, drones, have become a critical part of the country's defense.
Дрони внесли в 21 сторіччі новий виток в тактики ведення бойових дій, зокрема в стратегії.
They have come to epitomise the David versus Goliath battle Ukraine has found itself in. A battle which has seen the country develop a host of cheap and disruptive technologies that has, until recently, kept Russia at bay.
A simple FPV drone is like AK-47 today. It's working, it's very cheap.
Then, in January 2024, Ukraine's military released remarkable footage, the sinking of a Russian warship by a naval drone, worth a tiny fraction of its target. As well as technological, drones also indicate an economic shift in how wars are now being fought. Ukraine's war has spawned an industry of start-up defense companies and grassroots volunteers, many of whom are not just making a difference, but taking the fight to Russia itself.
Well, that was a part of today's Big Take mini documentary on Ukraine's use of drones. Now, let's get more on that story with Bloomberg's Jake Rudnitsky. Jake, let me just start off by asking, how has Ukraine built this wartime industry?
Well, this industry really came out of nowhere. Take Alexei Babenko. Before the war, he was a street performer who would twirl fire. Then, once the Russians invaded, he started with a Chinese drone that you could buy at Walmart, some duct tape, and C4. Now he runs one of the country's top 5 drone producers. There are about 100 of these similar companies that are producing drones, and what they all have in common is they rely on very cheap parts, many of which are coming from China, and can be used to great effect.
And let me just ask whether you think, these types of inventions and creativity, I should say, is actually going to change the economics of the war.
Oh, absolutely. I mean, one of Babenko's drones costs about $400, and 2 or 3 of them can take out a Russian tank. I think if you look at, what's happened to the Russian Black Sea Fleet, that's the best example. Ukrainian naval drones have basically rendered their entire navy useless, and they're hiding now at a far corner of the Black Sea. So I think militaries are going to have to look long and hard about these big ticket items that can be taken out by something that you can make in a garage.
Right. And how has Russia been responding to all of this? What are they doing in response?
Well, Russia has its own drone force, which has been used to devastating effect against Ukrainian infrastructure. And Russia is also developing successful techniques to counter Ukrainian drones using jamming, which can make the drones just fall out of the sky, basically. What you have is a cat and mouse game between Russia and Ukraine, and both sides are innovating really, really quickly in an attempt to gain the advantage.
All right, Bloomberg's Jake Rudnitsky, thank you so much for that report. And of course, if you want to read more about it, it is on the Big Take on the terminal. Plenty more coming up in our show. This is Bloomberg. We'll be right back.
In the U.S., the ratio of vacancies to unemployment has fallen back to its pre-pandemic level, and the rate of voluntary quits has declined as workers are less confident of finding a better job. Thus, my baseline forecast, and that of many outside observers, is that inflation will continue to move toward target over time without much further rise in unemployment.
That was the Federal Reserve Governor Lisa Cook there saying that they do have increasing amount of confidence that inflation is going to be moving back towards target over time. And of course, all of that is very important as we head into that U.S. CPI figure coming up later today. And so let's talk about some of the drivers of these headline inflation prints. And here is an interesting chart because we've broken it down into several components. You have the supply components, which so far have been negative contributors. You have the monetary policy, which as well would be a negative contributor. Restrictive monetary policy clearly is not good for the inflationary figures. But then demand is what I want to draw your attention to. And that is the purple bars over here. It tells you that even demand pressure has started to fade recently. So one of the reasons why this disinflationary process seems to be intact, and which is why we're getting a lot of commentary, not just out of the Fed Chair Jerome Powell, but other members of the Fed as well, indicating that they have increasing amount of confidence that inflation is on the right path down to 2%. So let's turn and talk about today's actual CPI print and what to expect out of there. This is the overall number, how the headline CPI print has been faring over the last couple of months. And you can see here that expectations into today are still scoring around 3.3%. If you look at the monthly components, core CPI is going to be in focus as ever. The market is expecting around 0.2% for that monthly figure. If we do get a downside surprise, say 0.1%, that would be a very dovish signal to the market and could lead investors to price in more than what is currently priced in. Right now, you've got about 18 basis points of cuts priced in for that September meeting, almost 2 priced in by the end of the year. But if you get a softer CPI print, that of course may change. Equally, if that core CPI for the month comes up rounded to 0.3%, that could be deemed to be somewhat of a hawkish surprise as well. So a lot of focus into the CPI print later today that comes out at 1:30 p.m. UK time. But let's not forget, we are also just getting into earnings season as well. Things are beginning to kick off tomorrow. We'll have the U.S. banks reporting. This chart is also pretty interesting as well because it tells you that in terms of earnings expectations, the U.S. has been leading the world in terms of upward revisions, and perhaps is a reflection of the fact that the market has continued to do very well despite all of the macro headwinds. You talk about political headwinds now as we head into the U.S. elections. Despite all of the talk about what the Fed are going to do and interest rate pricing, what we are seeing is that stock markets continue to go from strength to strength. And indeed, yesterday was another day where you had the S&P and NASDAQ break through record highs. S&P through 5,600 for the first time ever. And again, propelled by some of the strength that we're seeing in tech stocks. If you look at the composition of those S&P returns this year, about 60% of the returns can be pointed back to Magnificent Seven. And the fact that big tech has been leading this rally is also reflective of how much concentration there is in this market too, as well. But as far as the bank earnings are concerned, tomorrow the U.S. banks are going to start reporting, and there we're going to be watching out for, of course, commentary about the macroeconomic outlook, interest rate sensitivity. But then as we head into the latter half of the year, perhaps loan loss provisions will also start to become in focus as well. Recently, the Fed Chair, Jerome Powell, has been talking about some of the weakness that's coming through in the labor market, how that's going to affect U.S. consumer spending, especially with some of those commercial banks as well. And finally, just to round things up, let's take a quick look at some of the futures as we head into the European session. Again, we had a very strong handover from the U.S. Yesterday, European markets did do quite well. We ended up about 0.8% firmer. A lot of focus still on some of those French markets. The CAC 40 was up 0.8% today. Today, we're also seeing a similar green theme. FTSE 100 seen opening up in the green. We have the UK GDP figure coming out in a couple of minutes' time, so watch out for that. Euro stocks also seen up 0.2%. And then the S&P futures, NASDAQ futures, seen slightly weaker as we come off from those very strong handovers in yesterday's close. Coming up as well, Bloomberg will be speaking exclusively to some of the world's most influential CEOs, innovators, investors at the Bank of America's Breakthrough Technology Dialogue. That is why I'm filling in for Tom McKenzie today, because he is there. So you don't want to miss some of the interviews that Tom is doing later in the show. But thanks for watching. This was Daybreak Europe. The opening trade is up next. This is Bloomberg.